Yo guys, breaking down a GBP USD trade here. Now, before we get into the actual breakdown, I just wanted to run over how I frame my trades, how I come up with my trade ideas, and to make sure that I am on the right side of the market more often than not. Now, I've got some text here. Number one is structural idea. So you always want to ask yourself, what is the structural idea of my trade? Does it make sense with the overall market direction? And am I trading with the trend? So here we see obviously, we are in a downtrend, but we've got lower high, lower low, lower high, lower low. So the structure idea supports this trade for going short because we are expecting a new lower high in the market to then give us a new lower low. Now, the next thing is, does supply and demand support this idea? Yes, we have a supply level which is above our liquidity, our in-range liquidity. So yes, this does support our idea. Let me just move this here. And another one, are we trading from a run on liquidity? Have we seen traders trapped? This is more for the mid time frame. And do we have liquidity to target? Again, this is for our mid time frame. So are we trading from a run on liquidity? Yes, we are. We've seen this high run before giving us that sharp impulse down to obviously break structure. And do we have liquidity to target? We do on the mid time frames. So now we can start breaking this down overall. Now we know, I'll just move these. Where's the other one? E? Yeah. So we know that this is our 4 hour in range liquidity. So we don't want to be trading from this. So we want to look above this for our supply levels. And you can see we have this nice inside bar here, just above, placed above. So we can look to trade from this if given the correct confirmations. Of course, if we don't get confirmations from this level, then the trade won't set up, which is absolutely fine. So yes, supply and demand supports this idea. Does liquidity support both of the above? Well, we need to see number one, a liquidation into our point of interest that we want to trade from. So obviously we have this IRI here, number one, but also we need to see that liquidation on the move back as well, which we see this high get induced. We see traders trapped. We know that above every high and below every low in the market, there's resting orders. So we can see that traders have obviously been trapped here. We had that shift in order flow, which obviously trapped those traders, and they've now been liquidated when we pushed up here. So are we trading from a run on liquidity? We know this whole area on the 4 hour is a run on liquidity, but we can break this down even further by saying that this is also a run on liquidity on the 15M chart. You can see here we get this wick that runs these previous equal highs. So this area, yes, is a run on liquidity. So we know there's resting orders here to be filled so that we can obviously take this trade short. So let me just delete this for now. So have we seen traders trapped? Yes, here. Do we have liquidity as a target? We have all of these resting orders here that we can use as a magnet to pull price once obviously we get into the trade. So now the entry part comes. We've tapped in, and right now we haven't seen a change in order flow. So we just continue to play price on. Okay, great. So we've just taken this high, but we've still respected obviously our point of interest. So that's absolutely fine. Now we're waiting to see if we get that shift in order flow, which we get there. Lovely. So I'll just mark this on. This is our change in order flow. So now we need another liquidation into our entry, which we obviously have this internal high here, which we can use to obviously induce. And here is our POI, a nice engulfed candle. And we can set our order on the EQ of that. Stop loss just covering the high. Obviously, you can get in these trades on the lower time frames, obviously a much tighter stop. I'm not going to go into that today, but I will do in a later video. So then we come in, we give us another trap there, tap the EQ. So right now we're in this trade and we can obviously set this to run. If you want to move your stops to break even, it's up to you. It depends how you manage the trade. Now, our first initial target should be the week low, which is here. Why is this a weak low? Because it failed to do its job of taking out the 4-hour swing high. So we are obviously still bearish. So we know that the higher time frame intentions are to come down and take this low. We also have, like I said, this area of liquidity, resting orders that can be used as a magnet to pull price away. So we can just play this on. You can see how price just obviously absolutely melts through, giving us that lovely risk to reward ratio. 170 odd pips to the low. There's obviously scalings that you can get, up in these areas here, scaling here. I won't go into those today, maybe in another video, but the power of this is great. You can really take some nice moves out of the market, some nice RR, and overall, I think this topped out at about 200 pips. See. Anyway, I hope you enjoyed the video. Really, really simple strategy. Let me know in the comments if there's anything else you want me to run through. If you didn't understand anything, you want me to go into more detail on, and I'll be happy to do that. Anyway, that's the end of the video. Enjoy the rest of your day, gang.